Hi, everybody. It's Monday, November 17th, 2025, and unfortunately, the markets are still volatile and there was more selling pressure coming in today. If there is a silver lining to all this, we still get to see each other every day, and I don't think that's going to slow down anytime soon. Maybe in December once we get that FOMC press conference on the 10th, but for the near term, with Nvidia earnings this week, data releases finally coming back out, I suspect the volatility is going to persist in markets. So let's get right into it. And we do have data coming out this week, which is a big change after the government shutdown. On Wednesday, we have FOMC meeting minutes. Now, this is highly anticipated after, well, I guess our first rate cut and then that hawkish tone. Really, there was a hawkish tone in that initial FOMC press conference, and then again last week, which dropped the rate cut odds from 90% to 70%, and then with government data perhaps not rolling out at all, dropped to just above 50% now for the odds of a rate cut at that next December meeting. On Thursday, we have non-farm employment, unemployment rate, and potentially unemployment claims coming out as well. That last one is a bit tentative there. And we have on Friday, flash manufacturing and services PMI. Now, this one is a really important one because that denotates if there is expansion or contraction in the economy. And often assets like Bitcoin are correlated to expansion in something like flash manufacturing and flash services PMI. So watch that one as well on Friday. And in terms of earnings, this week is really all about Nvidia on Wednesday with an impressive 7.5% implied volatility move. That would be a $345 billion potential market swing, which is greater than the annual GDP of most nations globally. Pretty unbelievable there. And then we also have on Wednesday Target as a retail bellwether and Walmart as well on Thursday to give us a read just on overall consumer strength. But today, let's get right into the charts because I think we really need to focus on the indices. We need to focus on Bitcoin after that weekly candle close to get a better read on the market and get a feel of where exactly things stand. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting here on the S&P 500, and someone was asking why I have been on the 1-hour chart for looking at the S&P 500, and it's just because since that drop on the 10th of October, I've really been wanting to monitor the overnight price action. I could do this on the 4-hour chart, but the 1-hour chart just gives me a little bit more detail in the candles to piece together this overall story. So that's why I've been on the 1-hour chart. But really, we could be on the 4-hour chart for all intents and purposes. And if we look at the price action here, on Friday, we saw that bounce and we really couldn't get above that 6,800 level, which has been that resistance overhead. We tried to get into it again this morning. And the story of this market has really been retail buying on the market opens and then larger institutional players selling into retail. But if we do look at the overall structure, and I'll just switch to the 4-hour chart for this, we do clearly have a head and shoulders pattern in play that we need to be aware of. And I'm going to look at SMH and a lot of the semiconductor names because a lot of those have a similar head and shoulders pattern on them. And that is definitely a warning sign moving into Nvidia earnings. If we map out the breakdown from this, I'm taking where we broke down today as opposed to that wick down on Friday. That would have us all the way down here at 63.50 on the S&P 500, which incidentally corresponds to the lows in this consolidation range from the end of July through August before we had that next leg higher. So if we do break that, we would be well below the 20 weekly, where we know the street steps in to buy. And we would have a pretty decent size correction on our hands. If we do look for overhead resistance that we can break, we can draw this downtrending resistance line overhead as an early sign of the trend shifting. If you're looking for a near-term trend signal, I often draw a secondary downtrending resistance as price accelerates to the downside, just to give me a sense of things potentially turning ahead of time. But this seems to be very much dependent on Nvidia earnings, as well as the NASDAQ, which we'll look at in a second. And the one thing you'll notice once we get over to the NASDAQ chart, there was almost a flip in terms of character between the S&P 500 and the NASDAQ between Friday and today. So on Friday, the S&P 500 was stronger and the NASDAQ dropped quite a bit lower. Today, the NASDAQ was stronger and the S&P 500 dropped lower. So it was more broad-based selling and there was a bit more strength in technology today, which we have not seen for quite some time. Oh, and if you are wondering, this blue line, I just drew an anchored VWAP from that drop on the 10th, and that's exactly the resistance we were getting into. I just thought it would be interesting to drop that in to see that average volume weighted range there. And we got into that anchored VWAP resistance on both the NASDAQ and the S&P 500. But really, for all intents and purposes, the pattern in play, that head and shoulders, is the same right here. We're also finding resistance at a similar level. That would be at 25,380, let's say 25,400. And we did have a bit stronger close today on the NASDAQ. So one thing to note there, and our downside price target on the NASDAQ, if the head and shoulders plays out, would be at 23,160, right in line with the lows of that equivalent consolidation range from late July through August before the move higher here on the NASDAQ. Okay, if we switch over to SMH, the Semiconductors ETF, and I'm just on the daily chart here, we could move over to the 4-hour to give ourselves a little bit more detail here. But you can see that similar head and shoulders pattern in play here. And if we map out the neckline on this one, just connecting the points across here, you can see how we wicked below the neckline last Friday, and today we closed just below it. So if we measure the center of that and we map it out to the downside, and we could go off these candles or our breakdown here. Let's go off the earlier candles since that's where we wicked below. And that would put our price target at about 300, which is coming in line right with the top of this previous consolidation range. So for SMH, for the semiconductors, the correction to the downside is not projected to be quite as strong as it is for the overall S&P 500 and NASDAQ, which has the correction coming in at the bottom of this consolidation range. The equivalent price would be 279, 280 here for SMH. And in terms of the move to the downside, we have already seen a correction to current close today, 9.3%, a correction all the way down there would have us at 19.63%, almost a 20% correction. So quite a meaningful move there, but we can just look at a couple individual names to see how this is shaping up on those respective charts. Okay, I don't want to spend a bunch of time on this because we got to look at Bitcoin and others, but if we just take a look briefly, I'm not going to measure each of these out, but if you look at something like AVGO, you can see a very similar pattern in play here. If we go to ASML, keyboard is under my microphone, so it's always hard to find. ASML, you can see that we have something quite similar in play here in terms of the head and shoulders pattern. Now, we've since bounced above, but breaking below this neckline technically confirms the pattern, and it's not invalidated unless you were to break above that right shoulder in the price action. And it's not as pretty, but you could even argue that there's one on Nvidia. I would suggest that the distance of the left shoulder is a little bit too far off to be trusted, but you can see how all of these names have really been playing out a very similar structure. I'm picky on my head and shoulders pattern. Some people would trust this implicitly. I'm saying, oh, this is a little wide for what I normally like to trust, even though the height of the shoulders is equivalent. Okay, before we get into Bitcoin, let's just look at Tesla really quickly, which off of 4-hour oversold conditions saw a nice bounce up between Friday afternoon and today. Now, we did have a fairly healthy correction, and this came in at the Confluence Model Center Band, and this is just our first swing in the Confluence Model Center Band, so I'm probably a broken record by now, but I would anticipate one more move down, at least in the Confluence Model Center band, before we push through. So just watch for that weakness in Tesla, but it is very close to a turning point. And I'm also still watching the daily, because the daily chart, the trend is still flipped orange, obviously, but this is just a daily higher low in a longer downtrend in terms of all this chop right here. But the good news is we are getting close to the bottom, where we're soon going to print a mean reversion dot, and our daily RSI is pretty close to the bottom of the range. Now this honestly doesn't even have to get all the way to the bottom. Occasionally on extreme corrections, you will get all the way to the bottom of the daily RSI range. But if we just compress this and you look at an average of where Tesla bounces, you can see that often it bounces a fair bit higher. And if we're just taking an average of some of those lows, you would say somewhere around 35 would be a level to watch. 35 to 36, I would say, for earlier turnarounds if there's a bit more strength in the chart. So I'll put that horizontal line there. And just in terms of settings for these, I like to map it out so it's just on the time frame that I want it. So just on the daily, and that way when I flip back over to the 4 hour, I'm not going to see that blue line there. I still need to sharpen that one up. Anyway, so potentially a hair more downside just based on the daily chart, but we are anticipating support coming in soon, most likely later this week or sometime early to mid next week for Tesla. Okay, if we are looking to Bitcoin, we unfortunately had a weekly candle close that confirmed a break below 44 here on the weekly RSI. And the last time we saw that was really this wick down before we got into the major part of the bear market. Staying above 44 on the weekly RSI keeps us in the bull run. And this foreshadows a bit more challenge for the price action once we are below that 44 range. Now, the one thing I will say, even though we broke down from this trend line last week and we've broken down on the RSI, if you're just objectively looking at the price structure on the weekly, you would not say we're in a downtrend yet in terms of higher highs, higher lows, higher highs, higher lows the whole way through. And we could potentially bounce right here around 88 to 89 to continue that trend. And until we break these lows here at about 74,000, we would not be confirming a downtrend. And I know the selling has been extreme, but I would just like to remind you guys that we don't get to these kinds of price targets in a straight line most of the time. And there's also a good argument to be made for 74,000 now being bear market support. When you look back at prior bull markets, they usually don't break back below the halving or the high after the halving. So you can see how we kind of sit at those ranges and find a base. And you can look back at the previous couple bull runs just to look at that. But even though our weekly structure is intact here, the one thing that has changed every time we've broken out into a new range. So we had our first consolidation range. When we moved up to the next range and corrected, we did not break those previous highs. And then as we moved up and corrected, we did not break those previous highs. Now we landed right on them in that April correction, but we didn't break them. The one difference here is that we have clearly broken below those previous highs, which sit at around 110,000. So one sign of a bit of weakness or something that's just different to note in this bull run compared to in this correction within the overall bull run. But the pattern has been somewhat consistent in terms of those gains above the previous highs diminishing percentage-wise each time in the subsequent leg up. But if we're looking at the percentage of the correction, we're very much within tolerance of the overall corrections. These from 30 back down to 25, we were at about 21 to 22% for those. If we look at this 8-month correction, I think we were at about 33% for that one. And then if we look at the one from December and January into April, we were at 32%. And currently, I think we're sitting at about 27-ish percent, 28.7%. So a little bit more with the price selling off a little bit after hours. And if we got all the way down to that 74, that would be 41% from the high to those lows right here. So we are currently getting into the most important point of support. And this is where, if we are going to see a bounce, it should come in. And that is right here at that 88.7, let's just say $89,000. And that corresponds to the low point of our consolidation range from December into January, and all this resistance that we found during that tariff correction. So in terms of the most touch points, this would be the zone. There was a little bit of a zone up above that we already failed, which was that about $91,000 that we wicked into several times during this consolidation range. But this 89,000 would really be the most important zone to watch. And the hope is that we can either consolidate here or get a little bit of a bounce on. Now, in terms of resistance that we would find overhead, we'll most likely encounter some resistance at $98,000, which is coming in right by this horizontal line right here, which corresponds to all these previous lows. That and our diagonal trend line that we broke down from, if we bounce, that's where I would anticipate resistance coming in. If for some reason we can break through that, then we have about 104K overhead as the next resistance, and then everything we've been talking about up above. 104K, 107 to 108K, and then the real line in the sand would be at about 111. And if we can get back above 111, which, where is that? Right here, passing that previous pivot high, then I would say we maybe have a chance of testing the highs of the range again, but that's a long way off. I would look at that 98, the psychological 100K number, I should have mentioned that, and then 104 and 107 to 108. So lots of work to do for Bitcoin if it is going to recover. And this pivot high right here, 107.5, that would be, one of the first major signs, if you broke that, to say, okay, we might actually be getting into a near-term uptrend. And the one last thing I will just say on Bitcoin, if you haven't hedged any of your crypto positions, or you're looking to perhaps rotate some into something more stable, the time to do that would really be on a bounce, because we have this daily downtrend in terms of just lower highs, lower lows the whole way down. And if we reject again, you would have to assume that we have more downside price action ahead of us. So any bounce that rejects and forms that lower high would be the best point to consider hedging a position. Okay, if we flip over briefly to Solana, Solana actually is holding up a bit stronger this evening. It doesn't look like it on the charts, but Bitcoin is making fresh lows, and Solana has not made fresh lows yet. We'll look at the total cryptocurrency market cap right now, but it's into a key support at 3 trillion. And Bitcoin dominance also seems to be dropping. So part of that is probably due to some of what we're seeing here with Bitcoin selling off as this is into support. But this is really our major support for Solana. It's this weekly uptrend at about 126. We also have the horizontal support level at the exact same price point. So if we break through this, I would be concerned for much more meaningful downside. But this is our third time retest, which statistics wise has the highest probability chance of bouncing. And then in terms of resistance, I would really be looking to that 156 level where these previous wicks come down. And beyond that, that 177 to 180 level, which has, plagued us as a ton of resistance throughout this entire run up, and has given us support as well. But that'll be where the 200-day moving average is coming in. So 156 and 177 would be the major resistance to look out for overhead on Solana with any kind of bounce. Okay, I haven't been talking about Ethereum much lately, but I do want to bring it up because just like Solana is getting into critical support, Ethereum is at the same juncture. We're at the 50% level from the bear market bottom, and this was all the way back here in June of 22 that we hit that for Ethereum. And that runs all the way to the recent all-time high we saw in August, just making all-time highs by a little bit. But if we're looking back in time, we're into that 50% now. We consolidated around it just a little bit here in July. Let me turn the magnet off. But really that played resistance here in this big consolidation range in June. Found a bit of support in it on that level. January of 25 and a lot of support back in the past. So that level around $2,800 to $2,900 is really important for Ethereum. And if we drop that, we would most likely get back down to 2450 in pretty quick order, which would correspond with the major point in this VRVP cluster and the 382 fib level. So a major one to watch here. And with the total cryptocurrency market cap on support, this is really where we would want to see a bounce for both Solana and Ethereum. Okay, and just to pull up the total cryptocurrency market cap really quickly, the reason we're saying this level is so important is because it corresponds to our highs. We're at that even $3 trillion number for the total cryptocurrency market cap. The highs of November 2021 in the last bull market, we found support on this previous high zone in December of 24 and again in June of 25, and now we're coming back in to test that again. If we are going off of just the confluence model clouds and we're following that narrative of the 2 to 3 swings, we've had 2 in the last bull run. This bull run, we've had that 3 swings in the upper band, breaking back into the center band. So this unfortunately does not bode well for the total 3, but hopefully we can see a little bit of a bounce to hedge some positions or consider an exit before things break down further. Okay, I wasn't planning on bringing up HIMS, but I think it is an important chart to watch just if you are in this. And HIMS is another one that's breaking down from major weekly support. So we had weekly RSI support here at 44 for HIMS that we've stayed above during this entire run up. We also have this diagonal trend line, which we are now breaking down from on the weekly. So that breakdown on the weekly RSI and that trend line break are definitely something to watch. If we go to the daily chart, we are now in the confluence model lower band. We're definitely about to print a mean reversion dot and we're oversold. But given the state of things and that we have broken this, even if we have a bounce, I'm anticipating, unfortunately, most likely more downside. So we could come back into this, and a logical place of rejection would honestly be that $41, which was our previous support, and then taking another swing lower before eventually recovering. So something to watch on HIMS. It could be interesting for a position if you want to play this short bounce, great, but I would most likely advise giving it just a bit more time to settle out and find its footing. Okay, let's just check in on the varied sectors just to get a feel of how capital is rotating. XLV for the healthcare sector is just consolidating a little bit, which makes sense after that big run up we saw the last couple of weeks. This clearly is in a daily uptrend, but now we are oversold on the daily RSI. Mean reversion has spiked to the upside. So this is either going to come in or it is going to consolidate sideways. If we do see that sideways consolidation in a very orderly fashion, that's a great breakout play because you have a clear stop down below. And after a move up like this, that will most likely resolve in a more meaningful move higher. But this could consolidate for, 6+ weeks before it really takes a move. So XLV for healthcare, one to keep your eye on. If we look at XBI for biotech, that one also continues to move up, not quite as explosively as XLH, but definitely still in a meaningful uptrend. We are starting to get a bit of bearish divergence on the daily RSI. Mean reversion is coming back in. So this might see a little bit of a correction, but still money is flowing into biotech. And the one that really got the rug pulled was XLF, the financial sector. So this was moving up, and then we had that lower high last week after an initial correction and just sold off massively the last couple of days. So this most likely has more to go on the downside. We are into the 200-day moving average. So there is a world in which these bands could just travel sideways and we consolidate for a while. But after breaking these lows from this previous consolidation range from the 14th of October and the 5th of November, I would imagine that even if we see a little bounce, we are going to continue in a bit of a downtrend here for the financial sector. The other thing that is really breaking down is XHB, the home builders. I thought it might be able to catch a little bit of a bid here at the Confluence Model center band and the 200-day moving average, but this continues in its strong downtrend that we are seeing with no sign of recovery. And now we're into the Confluence Model lower band. So you know what that means. We're probably going to head a bit lower. And in terms of support for this, if we're looking for it and we just compress some of our time here, I would venture to say that we've got some support around 96, but more likely around 91 for XHB, corresponding to these lows back in 2023 and our little bounce right here in June of 25. And then if we draw our other line overhead, let's put that in right there. So that would be at that 97 level. I think we would most likely, just looking at this setup right now, if this accelerates, we could easily get to that 91. Okay, the one trade that's helping my portfolio is the short on OKLO, which looks like it's continuing to break to the downside. So nothing to do here. But the one thing I did want to mention just as we wrap things up, if you are looking to hedge, volatility has already spiked, so sometimes it's expensive to go with put options. But a simple way to hedge, if you're so inclined, moving into Nvidia earnings, would be something like SQQQ, just to short the NASDAQ. You don't want to stay in this for long periods of time because it does, degradate day by day for that rebalancing of the ETF. The other thing you could consider too is SSG, which is a ultra short 2x leveraged short of the semiconductor sector. So this has been gaining strength as we've seen that weakening in the charts. Again, not something you want to hold long-term for years, but if you're in a trade for a couple of weeks, something like SSG is absolutely appropriate vehicle to consider, especially moving into Nvidia earnings. Do note that it does have a split coming up on the 20th that is going to impact this though. So that's one thing to be aware of. Okay, I thought I was done, but I just remembered that Always Learning from the Patreon community had a question that we didn't have time to address on our weekly call this morning, so I promised him I would do that today. Looking at the EOS chart, and just as a quick aside, thank you so much to everybody in the Patreon community for the support and for making all the time that goes into recording these videos possible. But let me read Frank's question here. So he's looking at the EOSE chart for EOS Energy, which is ranging between $14 and $80. The indicators I find useful for this asset are on the 1 hour using mean reversion, confluence model, and RSI. And he'll admit to noticing a repeating range pattern first, and then secondly, finding the indicator patterns to apply. Is this the correct statement? One can chart an asset and then attempt to apply TA. So I think he's just looking at the raw price action to identify a range. If no usable TA fits on the asset, then it should be ignored and try another. So Frank, I would suggest that what you're doing in terms of spotting the range is good and is TA in a sense. And any chart can have TA applied to it. And you're on the 1 hour chart, so it might be hard to recognize this, but I would encourage you to zoom out. So first, EOS has been range bound before between that $7 high and the lows here at about $3.70. And what you'll notice about this range that I'm drawing here is that the bottom end of this range corresponds to these previous highs. Now, we have clearly had an explosive move, but we've also had a breakdown, which you might not be seeing on the 1 hour chart. So it looks like these highs that you were referring to at around $18 to $19. I'm assuming you were looking at those there, why you said 18, but let's put the range high here at 19. And then the lows were coming in at around 13, but we have broken those. And I would encourage you just to zoom out and look at the overall price structure. We've had this explosive move up, and in terms of the swings, we made a higher low, higher high. Now we've made a lower low, and we're back into the confluence model center band. And if we bring in mean reversion and RSI, we are reverting back to the downside on the daily, and we have on the daily broken all this support from the uptrend. So it was roughly bouncing at the 50% level on the RSI this whole way up. This is broken down, which would indicate that we're going to go back down to the bottom of the range. And where would we anticipate support to come in? Well, if we're just looking at price structure, the logical range would be these previous highs at about $7 up to about this pivot point at $8. Now that's pretty far down there, but that also corresponds to where the 200-day moving average is coming in. So, at the time we might get down there. So we have a bit of confluence. And then let's bring in our fib levels as well. And if we take this previous swing low and we see where some of those are coming in, and you could take actually the ultimate low of this range, which might be a bit better. So taking that low on April 25th, from that whole consolidation range to the top, that also puts our 236 level right here at that $7 mark. And the next support above that would be the 382 at the $9.50 mark, which is at the bottom of this consolidation range, where I actually have my alerts set to start paying attention to this. And all of this would be below the 50% range of the correction. So this clearly had a breakdown today. If I was playing this one way or the other, it seems like short is the way to go on this right now, unfortunately, even though I would love to get a position on it. And if we look to the 4-hour chart, this has reset a little bit more. Price looks like it is going to bounce soon, but we are in that confluence model lower band, and we're just taking that first swing down. So if I had to guess, I would say this swing is going to bounce off the 50% at $11.47, $11.50, come back up, and then we're going to take another swing or two down to potentially get to, say, this $9.60 level if we're stronger, or all the way down to the $7.19 level. It'd really have to be weak for this. So I would look at this zone first, the $9.50 for a bounce point for EOS. But, you can recognize those patterns, and it's good that you saw the range, because there can be good trading on this on the 1 hour. But don't forget to zoom out. And on the larger time frames, after a big extreme move like that, things need to cool off. So always learning. I hope that was that helped to explain at least what I'm seeing in this particular chart. And hopefully you were able to get out of your position as well with this breaking down. Okay, so that is it for the charts. Unfortunately, crypto is in a much tougher place than the rest of the market, breaking down into bear market territory, at least as judged by the weekly RSI. Now, the overall structure, as we discussed, is much more constructive than we've seen in traditional bear markets. And you could argue that we never had a traditional bull market, and that things are now going to be slightly different. So I'm keeping my mind open to that scenario and am just watching the price action. And now we might see a bounce in that asset class soon. And then for the indices, the S&P 500 and the NASDAQ, we have that downtrending overhead resistance line to watch on both assets. The support just down below, which they have both been flirting with breaking down. And if that does break down, we should get more defensive over the next couple of weeks as we work to those price targets from those head and shoulders patterns. So that is it for now. If there is a bounce tomorrow pre-Nvidia earnings, if you do want to hedge, that might be a good time to do so in terms of selling the rips or shorting on those rips, as opposed to buying the dips on the way up. But not financial advice, just something to consider if you do want to hedge parts of your position moving into that big Nvidia earnings event on Wednesday. So that is it for now. I'll see you guys tomorrow evening. Bye for now.